Hi everyone, I just want to say thank you so much to all who are subscribed already in our channel. Welcome to Anything with Chi. So today we will discuss about 5 things you need to know before you start investing on stocks. So before we start with what you need to have, you have to understand first, why does companies go to public and get equities or trade stocks? So the main reason for them going on to public or having stocks in the market publicly is that they wanted to raise capital, and not just now but in the future. So the higher the value of the stocks, the higher the capital that they can raise in case they wanted to have a new investment, in case of growth, if they have a new project that they wanted to invest to. So it's very critical that the stock price is high, so that the money that they can get from out of that will be higher as well. Okay, so the 5 things that you need to learn before you start investing on stock market is, first, you have to understand your investor profile. What are you as an investor? How much risk are you willing to take? Second, how much you should be investing on it, because you can be a high-risk investor, but of course not all of your money should be put in a high-risk investment. Third, the soft skills that you have to understand. There are some skills or some knowledge that are not written in the book that you should know before you start doing it. Otherwise, you will have a very big loss or sadness. It will not make you sleep because, you know, it's a very high-risk investment. Fourth, you have to know the fundamental and technical analysis to equip you with the knowledge that you need when you start investing. And of course, the 5th one, you should never forget portfolio management. You have to manage your portfolio. You don't put everything in one basket. So we will discuss that later, as in now na. Okay guys, so the first thing that you need to know is your investor profile. So it's something that not everyone is aware of. They feel like, oh, I wanted to do stocks, and they can just do stocks. But in reality, you have to understand how do you feel about your money. So there are levels of risk, and your profile will depend on how much risk that you are willing to take. Like for example, if you are low risk investor, mid risk investor, semi high risk investor, and high risk investor. So because if you go onto stocks, you have to remember there are cases that you may not get your money back. Example lang, you have 20,000 salary net, no tax. So in that case, how much do you use for your own or your monthly allowance? Let's say 15,000. So you only have 5,000 left. So that 5,000 left, are you willing to put that on an investment that you could lose like 50%? Or is it something that you don't want to lose? Then you will realize what kind of risk are you willing to take. Are you willing to gain 50%, but are you also willing to lose 50%? Yung 5,000 mo would be 2,500 na lang. If in case your investment doesn't work, it's very risky. Even if you trade a blue chip company, it could also lose, and it's not something that you cannot guarantee. Even how much knowledge you have, it depends on how the public sees it, and it's just unpredictable. Wanted to gain all the time, then you have to reconsider just going to less risk, like time deposits and maybe bonds, treasury bonds, yeah, something like that. UITF, that underlying assets are all money markets or bonds. So you have to understand that your investor profile might change over time, because you know, as you learn, as you go along, it's about your confidence as an investor on taking some risk, and your confidence is directly related to your knowledge and experience. So once you gain experience and knowledge, then you get more confident on investing on higher risk investments. How much you should put in it? Of course, it's very important that you manage your finances very well. If you haven't done that before, we'll have another video of that. it's about budgeting. So you have to budget your goals. First you have to set your goals. What are your short-term, medium-term, and long-term goals? And then, because stocks is usually a long-term investment, you only put your money that you don't need to use anytime soon, or you're willing to lose forever. Because the wrong thing about people is that they put all of their money there, something that they will use soon, in a year or two, and then they lose everything, and then that's what makes them stressed, because you lose the money that you actually need, and it's very wrong to do that. Just remember, whatever you put in the stock market, your money is the money that you're willing to lose forever. Like if you put 10,000 there, you have to accept the fact that that 10,000 will never come back to you. That's the mindset that you should do whenever you put money in the stock investment. Yes, you can double it, triple it. There's no doubt in that. But you'll never know. Maybe the next time you lose it. So in stocks market, they always compare it to gambling. Finance is more of understanding the risk, calculating it, managing the risk, and putting your investment. The first thing that you really have to know before you get into it is you have to understand how disciplined are you. If you set a budget, again, as I mentioned earlier, if you set a budget, you have to stick with it. If you set a buy price and a sell price, you have to stick with it. And then the second one, you have to be not greedy. When there's more greed, there's more emotion in it, right? If you feel like, oh, it's going up, it's going, you put more money, and then suddenly it goes down, then you're stuck in it, then you lose all of your money. So when you see the people buying and you just, you know, go with the flow or go with the emotions of the public, then that's when you usually make mistakes. Don't fall in love with your stocks. Let it go. In stock trading, we have this knowledge that there's no such thing as straight line. So there's no such thing as going down or going up. So it's like the bearish and the bullish. You cannot find, it's very rare that you can find like a straight line going up and down. It's usually wavy, right? So in waves, there's usually like you buy on low, you sell on high, right? So you have to look for charts with that kind of pattern, and then you set the prices based on that. So if you fell in love with the stock, you might lose those ups and downs. So you kind of lose that opportunity to gain from it. But it's okay if you don't have time to actually do it. It's just a long-term investment. That's also fine. There's nothing wrong with that. But like, for example, if you're on the losing part again, we also have this basic knowledge that, you know, the rule of thirds. Like in photography, you also have the rule of thirds. So if your target price goes below like 1/3 of the average of your target selling price, then you have to sell at that price. If you keep holding on to it, then you will lose money. So there's a point in time when you have to let go. Parang love yan. Mag-let go ka. Mag-move on ka na. There's other stocks out there that you can buy, you can gain. If you're on the losing part and you keep on losing, let go, give up. Maghanap na ng iba. We all learn from mistakes. Okay, another thing that you have to understand also is the fundamental and technical analysis. Some of you might have read some of it. No, we will discuss that later on because it's too long for this video. Again, I had like a lot of long videos, but we will have that. We will have all these things discussed separately. Next month, we'll have like a full month of stock trading, for beginners, and that's what we will do. For fundamental analysis, again, I've discussed this a while ago. There's a difference between how the market looks at the price. It's like the market perception and the actual price, which is the intrinsic value. So it's based on forecasting with in-depth analysis. For technical analysis, it's more of charting. Again, as I mentioned a while ago, there's no such thing as straight line. So you have to find those waves, those windows of opportunities. So if you are in a hurry, you can already search it right now. Just type on fundamental analysis and technical analysis. Okay, so, and of course, the last thing you have to understand, and many investors forget about this, you have to do portfolio management. You have to understand this quote, and you should always remember this. Don't put all your eggs in one basket. Even if you're not investing, you have a deposit account. Do you know that each deposit account is only insured up to 500,000 pesos? So if you have 1 million and you only have one bank that you put it there, so in case that bank goes out, goes bankrupt, then you will only be able to retrieve 500,000. But if you have two banks, let's say you put 500,000 on another one and 500 on another one, if let's say both of them go bankrupt, then you will still have your 1 million with you. You have to understand that it's very important that you don't put all your money in one bank, because you never know. Even though it's like a super top 3 banks, you will never know, maybe it goes down, goes out. But your money is not protected if you're just investing or putting it in just one bank. So even for your savings account, you have to at least have two banks. So that's very important. Understand that. It's the same thing as investment. So you don't put just your money in stocks exchange, because sometimes your money is too risky if it's all there. If you have to diversify, the word diversification is very important. Diversify your money everywhere, all types of investment. Put it in some bonds, stocks, put it in some time deposit, QITF, and everything, those types of things. So yeah. And if you're in stocks as well, you have to understand that in stocks there are different industries. Look at that. If it's a food industry, if it's an electricity or power industry, if it's cement or is real estate industry, and all other types of industries, you have to diversify. You have to have at least one of those. And yeah, it's very important, because sometimes when let's say food industry is down, maybe another industry goes up, and at least your money is secured in a sense that some of them will go up, some of them will go down. And of course, it's very important, before we leave, this is not part of it, every time that you go into something, any type of investment, make sure that you always research. Okay, my friends always tell me, oh, I want to do investment in stocks and all that, but they're not prepared or equipped with the right information or knowledge. For us, for this session, don't worry, we will equip you with all the requirements that you need. Soft skill, hard skill. We will also do simulation. We will do practice before you do the actual one. And that will be the next video, how you can start practicing while we are still ongoing talking about stuff. And the next video, this is your Anything She. Thank you so much. If you like the video, if you want to have more videos like this, please subscribe to my channel and click the notification button. And I would like to say thank you so much for all of your support, and I would love to help more people do their personal finance. We will get to there as well, budgeting and everything. And that's it. Thank you so much, and have a happy holidays, my precious.